this is not a get rich quick. This is a get rich slow. This is the kind of thing where it's an investment that's going to pay you out over time. Most loans these days are structured at 30 years on residential property. So this is a long play, and you're going to be collecting that money over a long period of time. The get rich quick, it's probably not a road that you want to go down. The way that it goes quickly is the person in the house stops paying. And then now you've got to go out and then you've got to deal with it. You've either got to get them to leave the house voluntarily, and typically that takes some kind of a cash incentive, or you have to go through a foreclosure process and possibly an eviction. And that's a more lengthy process. It takes time and money and energy and laws that you're probably not that familiar with.
Welcome to the Marketing Boost Solutions Podcast, the #1 source for proven solutions to all your marketing challenges.
Have you ever paid a mortgage and wondered who's actually on the other side of that loan? What if I told you that instead of just being a homeowner paying down debt, you could actually own the debt and make money from it? Today's guest, Nathan Turner, better known as the Canadian Note Guy, has spent the last 15 years turning mortgages into an investment strategy that creates reliable, hands-off cash flow. He's the founder of Earnest Investing, where he helps everyday investors step into the little-known world of note investing, and he runs the Diversified Mortgage Expo, bringing together experts and newcomers alike in this fascinating space. We're going to dive deep into questions like, what exactly is note investing and how does it work? How can someone get started in this industry? And what are the real risks and rewards in investing in debt? So get ready, because this is one of those industries you've probably already been a part of your whole life without even realizing it. And Nathan's here to pull back the curtain. Nathan, say hello and welcome to the show.
Hey, thank you so much. So good to be here.
Hey, thank you. This is a kind of a popular topic. I've had guests on before talking about note investing, real estate investing. I own a few myself, but I'm very interested in hearing all about how you present this and the opportunities available to folks. So what got you into this? Start with the elevator pitch in your background. How did you end up becoming the Canadian Note Guy?
You know, I like so many things, by accident, totally by accident. I was doing real estate before, got caught in all the great recession goodness that we all went through back in 2008 and 9. And it kind of came out of that, where a group of investors had bought these properties, didn't know what to do with them. I gave them to my old partner and I said, guys, figure it out. And so we thought we'd invented seller financing, where we started selling these properties on terms. So collecting down payment, setting up monthly payments, not even knowing that what we were doing was creating notes. And it was part of that education and part of just experiencing it that I started to meet people in the business, and it really just took off from there. So I got really started in about 2010, but have been just doing gangbusters since then.
Yeah, no, I get it. So you had a bunch of properties that were having a hard time selling them. So you came up with kind of an inventive way to make it easier or affordable for people to get in, and found yourself providing notes yourself versus going through a
Yeah,
bank. Is that kind of how that happened? Cool.
essentially that's it. Yeah.
So it turned into the Canadian Note Guy. Were these Canadian properties, or they were in the U.S., or where were they when you
No,
guys
that's
started?
so the Canadian part is I live in Canada. I do everything from Canada, but everything I do is in the US. So if,
Okay.
as far as, can you do this from a distance? Of course, yes, absolutely. You can do it from a distance. So that's kind of been my nickname, how people have gotten to know me as the guy that lives in Canada and does this note business all over the US.
And Canadians love to buy real estate, I understand, and they love the idea of investment properties.
Yeah.
I understand there's a bit of a bubble going on in places like Vancouver and others with condos uh, that are like overpriced or what have you. Before we get into the depth of some of this, just what's the
Yeah.
state of the real estate and what have you in Canada these days?
It's expensive. That's the first thing. It's really expensive. We're just helping out a friend actually, who's she's been renting her whole life. She's getting up early 50s, in fact, and she's now looking to buy a property. She set a whole bunch of money aside for a down payment, over $100,000, and it's hard to find a house. It's really hard to find something, and she's got good income. She's got this great down payment, and it's still really hard to find a home for her. So we're trying to do what we can, my wife and I, with our experience in real estate, and see what we can do. But
You
it's
find a way
expensive.
to get someone to give
Yeah,
her a note, huh?
yeah,
So,
maybe.
so can you explain in simple terms what is note investing?
Right. So everybody is actually, like you said, everyone's already familiar with what this is. They just don't know it. So let's say you want to buy a house. You go to the bank because you don't have, $500,000 to buy a house. Go to the bank, you present them with this deal and said, so I want to buy this house. It's worth 500,000. I've got $50,000 as a down payment. Will you lend me the rest of the money? The bank says, sure, that sounds great. You look like a good risk. Here's $450,000, and you're going to pay it back over the next 30 years at X amount interest rate, so many dollars a month. Everybody, and many, maybe not everybody, but a lot of people have experienced this where you've got this loan, you've got all set it up and everything. And then within a few weeks to a couple of months, you get this letter from the bank saying, oh, hey, by the way, we're no longer going to be receiving payment from you. From now on, you're going to be paying this company over there. And that's me. I'm the company over there. And it's taking your loan and they've now sold it off to a second party. Nothing changes for you except where you send your payment, but I'm the other guy on the other side of that table that I'm receiving those payments instead of the bank.
You bought the note.
Yep.
And and what do they typically sell those notes at a discount? What's in it for them to sell it at the time? Why wouldn't they just hang on to them?
Yeah, it is done at a discount. The big selling point for the bank, the one who's holding on to that loan, is they want liquidity. They want as much as that capital they can get back. It is done at a discount. Um, But again, they would rather have that lump sum of cash today instead of collecting payments over time so that they can then take that money and then go lend it back out to somebody else and over and over and over and over again.
So they're making money on the if they're doing that, then they're interested in the closing costs and
Hmm.
the upfront fees and what have you. And then when they
Yeah,
sell the note, they got it out, they can do it again. Another
right.
closing cost, another uh, couple of points for the finder's fees and so on and so forth.
Yeah, exactly.
I got it. So as the buyer now, you're taking the loan, and you've got investors who help fund your fund, I guess, so that
Yeah.
you've got plenty of cash to keep buying more notes.
Yeah, that's the idea. So regular, everyday investors, they'll put their money into this fund so that I've now got a pool of cash that I can use to go out and buy. Mostly these days, in fact, it's seller finance notes. So it's ones that people have created. And now, same kind of thing. They're looking for a lump sum of cash today instead of those payments over time. I'm the opposite. I'm looking for the payments over time.
Cool. So how does someone get involved on the small scale? What kind of money do they need to have put together? And so, listener out here today's show, okay, so I get the model, I get that you now have a pool of investors that help lump sum in there so that you can buy notes.
Yeah.
How does someone else get started?
Well, there's two approaches. There's the active approach or there's the passive approach. If you want to be active and you want to be the one buying your own note and you're the one collecting the cash on your own, absolutely you can do that. Before you do, though, even if you've got some real estate background, I would highly, highly, highly recommend that you get some kind of training. And I don't teach it, so I'm not pitching that, but I'm just saying I can definitely introduce you to some colleagues that are very good at teaching this business. But you need some education because it's not real estate, it's real estate related. And we're on the finance side of it. And so you need to learn the finance rules, the regulations, all the things that go along with that. It's very, very important. So that's the very first thing I would say is get that education. And then, yes, you can be the one who goes out and finds the notes, buys the notes, and you're collecting the cash yourself. Or you choose the passive approach and you find a fund like mine or somebody else's and you say, you know what, this sounds great. I like the idea, but I just don't have the bandwidth to do it myself. Awesome. Then you can put your money with somebody else who does know how to do it. And they get you paid back on a monthly, quarterly basis, however it's set up.
How much capital does someone need to have to begin investing in notes typically?
So for my fund, the minimum investment's 50,000. And I would still say that's a pretty good number to start with. Even if you want to do it on your own, um, you can find smaller notes, but I would be cautious of those because smaller note maybe means a less valuable home, which means a more transient person living there, which means problems and headaches and things that you probably don't want to deal with. So
All right.
I've spent as little as $500 for a note, but again, I wouldn't recommend that for everybody. I know that sounds really attractive, but there's more risk that comes with that, which is kind of ironic. Um, More you spend, it's on a bigger note, on a more valuable property, different kind of demographic typically, where they are more likely to continue making payments on their note.
So how many different ways are there for beginners, or is most of the best? Well, it sounds like the best way obviously is partner up because you don't have to be the one to understand or know everything. So
Yeah.
when you do partner up, what kind of returns can people expect? Or
Typically,
how do you
yeah.
promise what you can provide?
Yeah, great question. So my fund, for example, we'll just use mine as an example. We pay an 8% annual return. And we don't say up to, we don't say projected, we say we pay 8%. I can go that far. My attorney says I can't say guarantee, so I don't say guarantee, but I can tell you that's what we pay. And the reason I can be confident in that is because when I go to buy, I'm always buying at a discount. And today, like I say, a lot of the time we're buying seller finance loans. The seller finance loans tend to be higher interest rates, so they're just easier for me to purchase. So if it's a loan where the interest rate is 9 or 10%, my discount's going to be much smaller. When I'm buying at a minimum 12% yield. And yield and ROI aren't quite the same thing, but that's maybe for another conversation. But suffice it to say that there's room in there built in where I know that there's enough cushion so that there's room to pay the investor. There's also room to get paid myself so that nobody has to suffer.
So if the loan is at eight, if the for sale by owner and the loan provided by an owner was, let's say, at 8%, you can't promise 8% on that loan unless you got a big enough discount on the purchase up front. Is
Exactly.
that where you're getting you're able to pay based on the fact that you bought a $100,000 note for 80,000 or something like that, for example?
That's exactly it. Yeah, that's exactly it. So I'm buying at a discount. So automatically, I'm already making more than that 8%. So then I've got that cushion.
You've got the cushion to promise a good 8% return, even though the monthly payments are coming in at 8%, for example. So
Right.
there's your profit was also on a combination of either the monthly payments and or the discount you got up front. So
Yeah,
if they have a
exactly.
big, like you say, if they have a 12% loan, then you don't need as much of a discount on the purchase of the
Yeah,
mortgage because you've got built-in monthly payments
exactly.
at a
And
higher
one of the
rate.
yeah, and one of the beautiful things is again for the borrower, for the person who's actually making those payments, nothing actually changes. So they've been making payments at 8%, even though I bought it at a discount. That doesn't make any difference to them. There's no change for them. They're making that same payment they've always made.
They're just writing a check or sending the money to a different
That's it.
location. I've
Yeah.
gotten those as well too, right? You got properties with a mortgage, and then you get, like you say, it happens often within a few months. They're selling the paper.
Yeah.
Uh, so risk versus rewards. What's the biggest misconception people have about note investing?
I think probably one of the biggest misconceptions is uh, just that it's the next scheme or something like that. And so what I mean by that is this is not a get rich quick. This is a get rich slow. This is the kind of thing where it's an investment that's going to pay you out over time. Most loans these days are structured at 30 years on residential property. So this is a long play and you're going to be collecting that money over a long period of time. Uh, the get rich quick part of it, I suppose there's a possibility of that, but it's probably not a road that you want to go down. The way that it goes quickly is the person in the house stops paying. And then now you've got to go out and then you've got to deal with it. You've either got to get them to leave the house voluntarily, and typically that takes some kind of a cash incentive, or you have to go through a foreclosure process and possibly an eviction. And that's a more lengthy process that takes time and money and energy and laws that you're probably not that familiar with. And that's the quick part. And then at the end of that, then you end up with this property that you don't actually know the inside condition. of that house. So it's a gamble. And by and large, overall, the non-performing is actually a pretty good play, and you can actually typically make more money, but it's a lot more work and it's far more unpredictable. So
Mm.
that's the trade-off. You can go the non-performing, and I did that for a long time. It's a great play and it's a lot of fun, but it's very unpredictable. I'm getting old enough now where I prefer
Yeah,
just that
there's a lot of
more
risk of how
predictable,
they,
steady.
when they do leave, what condition did they leave the property in,
Exactly.
and
Yeah.
on, a bunch of stuff. Uh, I've got a lot more questions for Nathan, folks. Don't go away. We'll be right back.
It's time to wow, surprise, and impress your clients with the most powerful customer draw card available anywhere. The Marketing Boost Solutions Show is brought to you by Marketing Boost, where you can get valuable travel and restaurant incentives to drive your leads from prospects to paying customers. Now you can offer complimentary hotel stays in over 130 destinations worldwide. Go to marketingboostsolutions.com and try it for free right now.
You just heard from Marketing Boost, our main sponsor. Folks, if you're in business for yourself and looking for ways to wow, surprise, and delight your customers, you got to check out Marketing Boost. We're the most affordable way possible that I'm aware of, where you can really surprise your clients, reward them with loyalty programs, come up with ways to, giveaways at trade shows. I mean, a million ideas, everything from door prizes to live events, fundraisers, uh, help, rewarding people to show up for your sales calls, your Zoom calls, or your webinars. Million ideas. You got to join our Facebook group with 33,000 entrepreneurs that help each other with ideas on how to insert incentives to help you generate more leads and close more sales. So we're back here with Nathan, and we're talking about note and investing in notes. And so yeah, I'm excited to learn some more about this. On the flip side, what is the most exciting opportunity or success stories you've seen in this space, Nathan?
Oh goodness. So I mean, I just finished off talking about the more risky non-performing, but on the other hand, those are very rewarding. They can be. One quick story. This was several years ago, but had a non I actually bought it as a non-performing note. Had one conversation with the guy. He started making payments again. Already that's a success, and we were able to help him stay in his home instead of having to do anything different. Already great. A few months go by, we've been collecting payments, and I was looking at his file, and I noticed his credit score was actually pretty good, good enough to go back to a bank and refinance. And if I remember correctly, I think he was paying something like a 9% interest rate. And at the time, the banks were offering, I think, 4 or 5%, something like that. So I went back to him with two amortization charts, and I showed him, look, here's what you're paying with me. This is what it's going to cost you over time. If you went back to a bank and refinanced, this is how much it would cost you. And the savings is huge, tens of thousands of dollars. So I said, so why don't we get you back to a bank? You can refinance and then get me paid off early, which frankly is a bonus to me. Then I get paid off in full earlier. I make more money that way. So it's a win for me, win for him because he's paying less, and the bank would get a new customer. So he goes to the bank. Everything looks like it's going to go really well, except for he needed a new furnace in the property. And the bank, for whatever reason, they weren't willing to fund the furnace. So he was kind of at an impasse. Nothing was going to happen. So he came back to me, told me the story. Cost of the new furnace was something like $12,000 or $13,000. And I said, okay, so they're willing to fund the full amount, including the price, but only after you've already done it. He said, yeah, that's right. So I fronted the money for the new furnace. Now he's got a better deal on his mortgage, a new furnace at a lower rate, and he's saving a bunch of money. And I get paid off early, including that cost for the furnace. So again, win, win, win all the way around. I love those kind of deals. And it's just so much fun to be able to help people in that way.
Now, I don't remember all the details, but a friend of mine a few years ago was and made a lot of money after 2008 by focusing on all of the foreclosures that were going on at that time. And
Mm-hmm.
he was, uh, if I recall how it went, he was buying the notes from the banks and then finding ways to keep the homeowner in the property, kind of like a new note for them.
Yep.
I'm lost here at remembering the specifics, But he loved the idea that he was helping people stay in their homes, get back on top of payments again by
Yeah.
having bought the loans at a discount, et cetera. Does that kind of a storyline make sense? And if so, does that opportunity still exist?
Yeah, first of all, yes, those kind of stories happen all the time. And quite frankly, these us as individual investors, we're way better at helping people stay in their homes than banks are. We're far more creative, far more flexible, and we can help people in ways that banks just aren't set up to do. So yes, it's an absolutely viable thing. It's a possible thing. In today's market right now, it's less viable just because there's not as many non-performing notes out there at the moment. We're starting to see a shift. Defaults are on the rise. We're starting to see some more of these non-performers come up. Uh, will I go that direction again? I don't know, to tell you the truth. Like I say, there are a lot more work. There are a lot more unknowns and increased risk in that way. So I may or may not go that way. Like I say, right now, I'm more focused on just getting these performing loans. People are making their payments, and it's just far more predictable, much better.
So if I looking to be an investor in notes, I've got some money available. Having you can leave it in the bank and earn next to nothing, CDs or what have you.
Yeah.
So you could put in the stock markets and risk ups and downs and twirls arounds and
Yeah.
some of that, although it's been doing pretty good for the last year, but that can change in a heartbeat.
Right.
So um, so when I invest in a note with, let's say, a fund like yours,
Yeah.
am I buying a specific note or the fund? In other words, I'm getting my 8%, or am I tied to a specific note that if that note doesn't, if that ends up being in default, that client that stops paying, or what happens to me as the investor?
Yeah, great question. So no, you're not tied to any specific note. You're part of the pool, so that your risk is spread out across however many notes are in the pool. Whether that's 10 or 100 or 500, that's spread out. So let's say we've got 100 notes in there. 10 of those go bad. That's fine. We've got 90 others that are paying just fine. I'll go and deal with those 10, and we'll get them back on track. We'll do some kind of modification of their loan or something like that. Like I say, most of the time we can figure something out and help people stay in their homes. Um, but yeah, you're not actually tied to anything. And then the other beautiful thing is getting into a note, and even if you're into one note, there's the chance that something can go wrong with that note. But by and large, it's not really tied to whatever's going on in the market. So, you get in the stocks and you're getting up and down and twirled around and all those great things. With a note, you're really set apart from a lot of what's going on in the market. So things can be doing whatever they're doing, up, down, sideways in the stocks. It doesn't really affect the note that you just bought, because what you bought is an established set of terms. So the market's going up, market's going down. Your note doesn't change. So the risk there, the thing that you kind of got to be aware of, or the potential for that market to make a difference on your note, comes down to the borrower and how well are they insulated against whatever else is going on in the market.
I've got some more questions for Nathan, but I want to take a minute and tell you about a new launch a new business we're launching here very, very soon. We've been promoting it for a while. It's in beta, but coming soon is trustbyreviews.com. Guys, many of you know, Marketing Boost was born on the idea of generating testimonials. When we owned a travel company a while back, we couldn't get video. We wanted video reviews from our clients, and we could hardly get anybody to do it. So we came up with an idea to reward them with an incentive if they went the extra mile of filming a video testimonial of the property they were staying at and bragging about the hotel brand and ours. And that took off. And before we knew it, we had that site today is over 30,000 video testimonials, more than any other site in the world. Well, we built a platform now to help you do the same, where we can help you solicit and get a nonstop flow, well, depending upon your business volume, of course, help you get more reviews every day, incoming, inbound reviews, and helping one positive review just be a few clicks for your client to post that review on multiple third-party review sites like SiteJabber, Trustpilot, Google, Facebook, Yelp, etc. So when you have a happy client, you're going to encourage them with maybe a marketing boost incentive to promote that same honest feedback on multiple third-party review sites with a couple of clicks. And if there's a negative review, then you want the feedback, then we're also going to give you something no other company has, which is a 72-hour mediation window where you can go back and forth with this client that's not happy to fix the problem before that review goes live. If they never responded to your requests to communicate with the client who's not happy, then it never gets published because it might just be a fake review anyway. So this gives you the opportunity to help you control your online reputation and generate a constant flow of new reviews. So folks, check out trustbyreviews.com. Maybe by the time this show goes live, the site will be live. So want to check out Trust by Reviews. It's any business today. Let me tell you, if you're getting started, if you're new, if you're don't have a huge marketing budget, the first thing you ought to be doing is making sure you have your online reputation solid and you have a bunch of positive reviews to help show your legitimacy, your social proof that you're something of value. So check out Trust by Reviews. Nathan, back to you. On the business side of things, tell us a little bit about how do you find notes to buy and where does the deal flow, so to speak, come from?
That's a great question. And that's probably the most common question I get is like, okay, this sounds really great. How do I find these notes? Well, the bad news is there's not really a central database for these. You can look and see. So for example, Texas has more seller finance notes than any other state. Okay, great. Who? Who's creating these and how do I get them? The trick really, where it really comes down to is networking. And I wish there was a better answer than that, but really it's just you're talking to people in the business, people who have done this before, people who are creating notes, and you're really just getting the word out. And almost all of it, to tell you the truth, is just mouth to mouth, people talking and talking about like, oh yeah, I know this guy, he buys notes over there. He's a good guy. He'll do what he says he's going to do. That's how it's done. And so since 2009, I went to my very first note conference, and I go to 3 or 4 a year, plus a couple other conferences, and that's it, just to go and meet people and talk to people. Truth is, I would rather be at home on my couch with my wife watching a movie, but that's not how it's done. You really got to step out. You really got to get out there and talk to people face to face, make some connections.
So years ago, I bought a bunch of lots in different parts of the country, and most of them in a certain area, and they were cheap. So I bought all these lots. Prices have gone up, and I started offering to a lot of these lots with owner financing.
Mm-hmm.
And so I have a number of them that I'm getting monthly payments on them from. And of course, those are small payments in comparison to a bigger mortgage. Some of these lots are not all that, in the from 20 to 50,000 or so to speak.
Mm-hmm.
Does your type of firm buy that type of note as well, or are you looking for, hard like properties, homes built, something built on these lots?
There's a buyer for everything. I buy notes on single family houses with values under 250,000. So it's a relatively small window, but that's where I'm buying. But buyers for land notes, buyers for, I've got some good colleagues that they buy notes on mobile homes, and that's their whole business. That's all they do. I know people that buy only junior liens. So they're buying second, third, and even fourth lien mortgages all over the country. And so there's really niches within this relatively small niche, but for myself, I'm just looking for residential property, but there's a buyer for any note.
Wow, that's great. How do you do the due diligence when you're looking at evaluating a note? What do you look for?
Yeah, for me, I'm only buying the first lien mortgages on these residential properties. So we've got this checklist and we go make sure we go through all the steps. So things like before I purchase, I'll get sent, the note details. So the first thing I'm looking at is what's the interest rate? How long is the term? How long are they into the term? What's been their payment history? When's the For example, when's the last time they made the payment and when's the actual next due date? So even though they made a payment last month, doesn't mean that they're current. That means that they're a year behind and they just happened to make a payment last year. So that's the first thing that we're looking at is just those note numbers, making sure those make sense. Then I'm looking at location. A note in Texas is going to be generally more valuable than one in New York. And the reason is because if it defaults and if we need to do a foreclosure in Texas is far faster, far cheaper, and far easier than it is in New York, where it can take a couple of years easily and thousands of dollars and having to deal with nice attorneys that whole time. But you're gonna
Yeah,
still have
yeah.
to
New
deal with them.
York, in New York, you may have some what we call them in Spanish, ocupas. We have people from Venezuela or whatever that won't leave,
Yeah,
and they're going to stay there forever.
yeah, yeah.
I
So
shouldn't, I
so
shouldn't,
that
I shouldn't
factors
pick
in.
a particular country there, but you know what I mean. There's just an amazing amount of squatter type situations in a lot of states that,
It happens.
as you say,
Yeah,
you got to be careful.
yeah.
Uh,
All that stuff factors in. And then I'm looking at the property, making sure the value's there. Again, if I need to take that back, most of the time I don't, but I want to be prepared for whatever might come up. So there's quite a list of things, and we're looking at all kinds of different factors.
how does rising interest rates or lowering interest rates coming that may come soon affect the your business?
On the short term, not much at all. Again, we've bought this established set of terms. So we know exactly if the loan was set at 7%, it's going to continue to 7%, even if rates go up or down. If they choose, it can actually work to our advantage in some situations where maybe in the short term, let's say rates go from 7 and all of a sudden they drop down to 3. Well, if that means the borrower can then go and refinance at 3%, great. I've got a great problem where now all of a sudden I've gotten paid off. And I've got this chunk of money that I got to go place again somewhere else. But now I've got this great chunk of money that I didn't really expect to come in. We saw a lot of that in the early 2020s, but short term, very little change. Long term, potentially. You know, the notes that were created in 2020 at 2 and 3%, those are harder for me to buy, which is why I'm buying the seller finance notes today that are typically done at 9 or 10 or 11%. So it doesn't make a huge difference. It's something to be aware of, definitely, but it for the short term really doesn't make a difference.
And you focus on seller owner financing because compared to the banks, they sell at a bigger discount or what?
The seller finance typically are written at higher interest rates to begin with. So because I'm looking for at least a 12% yield, if I'm looking at bank paper that was written at 3%, my discount is going to be so large that there's very little chance we're going to get the deal done.
Right.
Versus a note that was written at 9 or 10%, my discount's much smaller. Very likely we can get some, we can come together on a number and get a deal done. That's one of the biggest reasons. I actually really like the seller finance stuff. I like the creativity that goes along with it. I feel like in a big way we're helping people that probably wouldn't have qualified at a bank. That's why they did the seller finance. So I like that piece of it as well.
Now, don't a lot of those owner financing have balloon payments within shorter period of time, or a lot of them the 30-year loans like the bank?
Well, if it was written correctly, it shouldn't have a balloon. If it was done to an individual, uh, according to the lending laws that are out there, Dodd-Frank, if it's a loan of any size done to an individual, there should not be a balloon attached to that. That's not allowed. If it was
Hmm.
done to a corporation or to some kind of entity, that's fine. That's a different story. Um, a lot of the time, these seller finance deals, the borrowers on that, the people that they didn't go to a bank for all kinds of reasons. Sometimes it's because they're self-employed. And I can certainly relate to that. Banks have no idea what to do with self-employed people. They
Right.
can't get their heads around it. Sometimes they're what we call an ITIN borrower. So somebody from another country, they don't have citizenship, but they do have, they're not here illegally, but they don't have citizenship yet. So they don't have a social security number. Therefore, they can't go to a bank. So again, they're going to private lenders. Sometimes we have people from other countries that just don't trust banks, period. And so they would rather pay more through a private individual than even deal with the bank in the first place. So all kinds of situations.
Yeah. Yeah. Where do you see the future in the next 5 to 10 years of note investing?
I don't see it slowing down at all. I think that, my crystal ball, I think that the seller finance piece of lending, I think that's going to continue to grow. It has been growing over the last several years. Um, Last year, for example, I think it was just under $30 billion worth of loans were seller financed loans. So it's not a small industry by any stretch, and that's continuing to grow. So that's my prediction. I think that we're going to see that continue to grow, and people are going to step away from the banks and start dealing with individuals.
Tell us about your lifestyle. What has note investing done for you, your family? How's
Yeah,
go ahead.
that's a great
Yeah.
question. I got three kids. They're getting older now. I've got two in university and one still in high school. But over the years, it's been great. I've been able to go on field trips. I've been able to go and hang out, and go to the zoo or go to the hiking trips with my son and all kinds of different things. And because I have that flexibility where I'm not really tied to my office. I certainly am in my office most days, but if I'm not there, it's not like I'm not making money. And so that's wonderful. So that means that I can go out and be part of all these different school trips and things that I don't think that I would have the chance otherwise. So that's been a blessing for sure.
So you got a new book coming out, I understand. Can you tell us a little bit about that? Where can we get it?
I do. Same as this goes live, it should be ready. But it's called Passive Secured Unique, and it's all about note investing and mostly about my journey, where I've come from, and how I've kind of grown up with this business, and how people can get involved in it. So it's a lot of fun. It's pretty personal, just different stories about what I've done and how I've done it and things like that. I like to be open about it because there's a lot to learn, and hopefully somebody can learn something from my story.
Cool. Folks, I've been an internet marketer since 1996, and I've never seen a product like you're going to see next. So don't go away. We'll be right back.
Is your business on autopilot yet? Do you have automation in place to capture, nurture, and convert prospects into clients via email, SMS, ringless voicemails, appointment setting? Get all the inbound and outbound marketing tools in one place. Go to marketingboostsolutions.com for more on automating your business so you can make money while you sleep.
You just saw automationbooster.com. And like I said a moment ago, I've never seen a product as affordable as that gives you all the tools you need for inbound and outbound marketing, setting up your email automations with text, voicemail, ringless voicemail, your website builder, you name it, all the workflows and automation, including some AI. So check out automationbooster.com. By the way, we give you about 100 different funnel templates with ideas in almost every industry on how to implement the marketing boost incentives in your calls to action, in your lead flow, to use these incentives to acquire more leads, close more sales, generate up sales, etc. So if you're thinking about marketing boost, add automation booster to it, and it's the full package. All right, we're back here. I got some lightning round questions for you, Nathan, about this industry. If you let's see how we can get through these quick. What's the biggest myth about note investing you'd love to bust once and for all?
That it's easy. There's
Okay.
definitely work involved. So don't think this is just some, unicorn and rainbows kind of a business. There's work.
So it's not easy unless unless you go ahead and invest in a fund like yours, where you just
There you go.
simplify it. Here
Right.
you get your easy money every month, and boom.
Yeah.
Which is not bad, because I mean the interest rate, you're promising 8%, and all you got to do is put up the money and go to sleep.
Yeah. That's it.
All right. If you had to start over with just 10 grand or so, how would you invest? Would you invest in notes?
I absolutely would. Absolutely. And then as I would probably even start with that. If it's 10,000, I would use that. And I did. I would do the same thing and go get some education, figure out how to do the business, and then go and then just start buying notes and turning them around and building the business.
What's the most common mistake you see note investors make?
I think most biggest mistake is improper due diligence on the front end. It's same principle in real estate where you make money when you buy, and that has everything to do with what kind of due diligence you've put into it. So improper due diligence is a big, sad mistake.
What's your favorite success story from one of your note deals?
Oh, I love any time that we're able to help somebody stay in their home. I've had it so many times where we've had somebody who uh, didn't know what to do. So my very first one, I bought this loan on property in Columbus, Ohio. The intent at the time was I just wanted the property. I was still in a real estate mindset. And so I found this girl. She was, early 20s. She's living somewhere else in Columbus. Found her and said, okay, hey, I'm not here to collect any of your money. If you just deed the property over to me, then I'll wipe out the loan. And I'm there, like, I'm totally self-centered. All I want is the property. That's what I'm after. And I gave her the offer, and then she started crying, and she was so grateful and so, relieved that I would take this burden away from her that's been something that's hanging around her neck for years. And it was that kind of a ding moment where I'm like, I'm helping people. That's amazing. And that was huge. So that's been a huge part of it, is just realizing that I'm helping people.
Cool. And finally, why should someone listening today take action now instead of waiting on the sidelines?
Uh, you can make money today or you can make money tomorrow. I would rather make money today and then have that money compound. That's that the what was it? Albert Einstein said that's the eighth wonder of the world is compounding interest. And it's a powerful, powerful thing. So get invested early and do it often and let it compound, let it grow.
Cool. I forgot to share your website. Let's take a look at that now. So people can find you. What can you tell us about here? We're looking at, if you're on YouTube or Rumble, we're showing earnestinvesting.com, earnestinvesting.com.
Yeah.
Where should people come here? What's the best resources we should find on this website?
Yeah, so earnestinvesting.com is definitely the place to go. There's more information about notes, how they work, what I'm doing. There's a link there. We didn't talk about it too much, but my conference, the Diversified Mortgage Expo, if that's something you're interested in participating in, we'd love to have you there. Just a place where people who are either in notes or interested in getting into notes come together. We can network, start to get to know each other and like each other so we can trust and then do some business together.
Wonderful. So folks, check out all the links on how to get a hold of Nathan and get the expo, etc., are all down in the show notes below. So don't be afraid to go there next. All right, folks, there you have it, straight from the Canadian note guy himself. If you want to learn more about, grab Nathan's free book coming out, or is it free, I understand, or you're going to have a free version of it?
That'll be yet to be decided. We'll see what happens when this goes live. We'll see.
Okay, good.
We'll have a link on the site.
Sorry about that. I think I maybe got that from our notes prior to the show, so my mistake. But anyway, head over to get Nathan's book at earnestinvesting.com and start discovering how mortgages can work for you, not against you. Folks, if you like the content we brought you today, do us a huge favor. One, thank you for being here in the first place and investing the time to listen and learn. But do us a favor and share this. Grab this link and share it with another entrepreneur who might be looking at investing and how to invest their money in notes. So share, like, and subscribe. And we'll see you on the next episode of the Marketing Boost Solutions podcast. Thanks again for being here. Really appreciate it. Thanks for listening to another episode of Marketing Boost Solutions podcast with your hosts, Captain Marco Torres. Now it's on you. Take the next step now. Go to marketingboostsolutions.com for more on how you can wow, delight, and surprise your clients with the most amazing draw card on the planet. So stay thirsty, my friends. Stay thirsty for knowledge. See you next time.